For the most part, the crypto market right now is unfortunately in a pretty deep shade of red. And the truth is that apart from some sort of anomalous meme coins, we're just not seeing a lot of green candles these days. But there are those that are planning for the next phase. There are those out there that are quietly and diligently buying. These are institutions, and their purchases, even during this phase of the market, represent strong institutional interest in cryptocurrency. And look, it's no secret why this interest is growing. Certainly, one variable that we can point to is the recent approval of the Bitcoin and Ethereum spot ETFs by the SEC. And for the most part, institutions want to play it safe when it comes to their investments. They don't want to gamble their funds away. That means those projects that are highest up on that list of institutional interest are probably not going to be low or mid caps. They're going to reflect more the blue chips of the crypto space. We're counting down 3 big ones in this video. Welcome one and all to our humble channel. My name is Maddie. This is Altcoin Buzz. All the best of luck if you choose to invest. Maybe you want to shadow the institutions in terms of their moves. Maybe you want to do something different. Whatever it is you choose to do strategically, I wish you well. Just remember that I'm not a financial or investment advisor, and as such, this video is not official financial or investment advice. At number 1 on our list here, and perhaps as no big surprise, Bitcoin, aka BTC, is without a doubt the leader of the pack here. It sits at the top of this list in terms of institutional interest, because besides the first mover advantage, it also has very strong fundamentals. This is something institutions have seen. It's something that they actively look for when determining their investment strategies. When Bitcoin makes a sound, the fact is that the market listens. And actually, quite a few remarkable events have already happened in favor of Bitcoin this year. Going back to January, we saw the approval of Bitcoin spot ETFs, and once those started trading, BTC reached a new all-time high within 2 months. Now, currently that all-time high stands at $73,737. And as I record, we're down about $10,000, a little bit more than 10K, in fact, from that all-time high. So that's, approximately 12% down from the all-time high, which is too bad. We're looking at the last 30 days here, and it's certainly the case that it's been a difficult month for Bitcoin and the rest of the crypto market. But fundamentally, we've seen a lot of positives. For example, the Bitcoin halving that occurred in April. And this event only happens every 4 years. As you can see, we already have a new Bitcoin block reward countdown clock. We're looking at just shy of 1,400 more days until the next halving event. Historically speaking, the precedent has always been such that a BTC halving is followed by a bull run. And that's because the halving reduces the miner's reward for mining blocks by 50%, as you probably know. And it also reduces BTC's inflation rate. Therefore, we see an increase in institutions showing interest in Bitcoin. Many see Bitcoin as a hedge against inflation, which is a big deal right now for investors. Its finite supply of 21 million BTC also helps to win people over. That's a great argument. And pretty soon, you can probably expect a supply shock on exchanges. I'm going to get back to that shortly, but it's a factor that should drive the price of BTC up even further. And when I'm talking about institutional interest, we're not just discussing big banks here. Companies are putting Bitcoin on their balance sheets as a treasury asset. Think of MicroStrategy, right? This is Michael Saylor's company. They've really written the book in terms of this particular way to invest, but they're not the only ones doing it. There are, in fact, a handful of public companies, including Square and Tesla, holding Bitcoin as a treasury asset. And really, none of them are looking for ETH, Solana, or any other crypto for their balance sheet, only Bitcoin. And so the combination of institutional interest together with Bitcoin's fundamentals is pretty impressive. It puts Bitcoin squarely in the driver's seat for future growth. At number 2 on our list here is another classic. It's the silver to Bitcoin's gold. I'm talking, of course, about Ethereum, ticker ETH. And Ethereum is securing the interest of institutional investors for many reasons. Certainly part of it is the fact that it's the second ranked crypto after Bitcoin, of course, by market cap. That's one factor, but it's not the only one. Just like Bitcoin, we also saw a spot ETF approved for Ethereum. This happened on the 23rd of May. The SEC approved the 19B4 forms, and this is the first step of a 2-step process. The price snapshot for ETH here that we're looking at represents the last 3 months. And as you can see here, right around the 23rd of the 23rd of May, we did see an immediate price increase of 20%. However, ever since looking at the last month here, for example, we can certainly see that the trend that Bitcoin is experiencing, and altcoins certainly, that's also being experienced by Ethereum. It's been going sideways / down. And that's kind of unfortunate, but once these ETH spot ETFs start trading, chances are that we're going to see a pretty dramatic increase in demand. I do expect another price jump and probably a new all-time high once the Ethereum spot ETFs start trading. But before this happens, the SEC does need to approve those S1 forms. That's the second step of this process. That could still take a few months. Nobody knows for sure. But having said that, Ethereum also has very strong fundamentals right now. Ethereum, of course, was the first blockchain to offer smart contracts, and this puts it at the forefront of DeFi. And then in turn, really DeFi is transforming finance. That's probably an understatement. Ethereum is naturally taking the way as a leader in this regard and in this revolution. And you don't have to be a fanboy of any kind to hold that opinion. Just by the numbers here, we can see that Ethereum currently holds over 60% of all TVL. Institutional interest is going to keep rising for Ethereum. The SEC has approved 8 Ethereum spot ETFs. This has included, for example, BlackRock, Fidelity, Van Eck, and Grayscale. But again, once trading officially starts, that's when we're really going to see institutional money that's going to start flowing into these Ethereum spot ETFs, and that'll have a major trickle-down effect. It's going to represent a huge infusion, not only of capital, but of interest in ETH and, of course, its ecosystem and corresponding projects.
Listen up if you're watching this as a trader, because we have a great find for you. We found an exchange that gives you the best of both worlds. Want to trade spot markets on over 400 trading pairs without KYC? Now you can. Want to trade perpetual markets with over 150 trading pairs with KYC? You can also do that. The only exchange that we've seen in the market that lets you do both simple spot trading without KYC and perps trading with KYC globally is BYDFi. And along with the great fees and almost no slippage on trade orders, you also get up to $8,698 in bonuses for trying BYDFi, along with a free month of our money-making Altcoin Buzz Alpha service just for giving BYDFi a try. Again, you are getting our flagship Altcoin Buzz Alpha service free for a month. Check out BYDFi by clicking the link in the description of this video below.
At number 3 on our list here, we're talking about Bitcoin spot ETFs, which represent another area in which institutions are investing. Because after the SEC in the US approved Bitcoin spot ETFs, there are various other countries that offer BTC spot ETFs as well. For example, Canada, Germany, Switzerland, Jersey, Liechtenstein, Guernsey, Brazil, Cayman Islands, Australia, Hong Kong, and Thailand as well. As far as I know, that last one represents the most recent addition to this list. And so if nothing else, this is showing us that Bitcoin spot ETFs are gaining worldwide popularity. They're a very attractive reason why institutions like spot ETFs. They don't need to deal with holding and storing actual BTC, but instead people can buy a spot ETF and have exposure to Bitcoin kind of at arm's length. And that may not be your preference. It's probably not my preference, but a lot of people are going to find that convenient. And the firm offering the BTC spot ETF is the one actually holding BTC. So it just makes things simpler for a lot of investors that don't otherwise want to kind of dive headfirst into the crypto space. Spot ETFs list on stock exchanges, not on crypto exchanges, which is another reason why institutions may have a lot of interest in these kinds of products. Institutions are simply more comfortable and more familiar with traditional stock exchanges. And so that's definitely a plus as far as they're concerned. But they're also going to like Bitcoin ETFs for the security and compliance aspects. Also the fact that they're a hedge against traditional market fluctuations. And if nothing else, they provide an element of diversification. Taking a snapshot in mid-May, we saw over 600 firms have invested in BTC spot ETFs in the US to date. That was worth over $3.5 billion. And then during the trading week between the 3rd and 6th of June, the 11 US BTC funds bought 25,729 BTC. Miners only mined 3,150 BTC that week for context. So that's an 8-fold difference. And the last entry on this list here is a little bit of a curveball, but one I want to certainly focus on. API 3, which is an oracle. And that's a very interesting crypto sector, of course, with plenty of competition. Chainlink and Pyth come to mind, and that's just to name a couple. There are others out there. And it's a heated sector, the Oracle sector, that is, because, and I've mentioned this a few times already, blockchains cannot communicate with the outside world. So that's a major hindrance, a major obstacle for them, because of course they still need real world information to deliver their services. That's exactly where oracles come into the picture. And that makes the roles that oracles play extremely important in the crypto space. We certainly see heavy accumulation of Chainlink happening right now, and that's because it's a leading infrastructure project. It's, of course, the leading oracle. But if there's a project that flew under the oracle's radar in this sector, it's API 3. It's currently already active on almost 50 chains, so there's a good chance we could see future accumulation of this as well. With API 3, developers can add a DAPI directly to smart contracts. An API is an application programming interface. It allows software applications to talk to each other. And a DAPI is the same, but it's decentralized. And API 3 uses them for data feeds. API 3 is also about to introduce the OEV network. This is Oracle Extractable Value. This can extract value that otherwise would have gone to other parties. So for instance, through arbitrage or liquidations. This can have a major impact in terms of the incentivization of protocols.
And so if this market pulls back hard under this level and then consolidates and comes back, we're likely to sell and stall.